When you have a rental property or really a business with any asset that requires depreciation, the IRS has very specific rules on how that depreciation has to be calculated, and then also what happens to that property when it's later sold after you've taken depreciation. So when you sell it, there's what's called depreciation recapture. Because you've gotten deductions on that depreciation over time, over the years, they make you recapture that so you can't use what you received in ordinary income loss and get a capital gain for that same property. So they make you recapture the depreciation. Well, what if you never took that depreciation expense in the first place? So you're having to recapture something you never got a deduction for. Luckily, the IRS has what's called accounting methods when it comes to depreciation. And once you've taken a stance on the depreciation of a particular asset for more than a couple of years, that becomes an accounting method that you've now chosen. So if you don't take depreciation at all after a couple of years, that is now your accounting method. So you can't all of a sudden just start taking depreciation or change the basis of the property because you've established that method of accounting. So what you have to do is have a change in accounting method, which is a very fancy word and it is very complicated to read about it. But the IRS in a revenue procedure a couple of years ago made a simplified version of dealing with this in certain depreciation aspects, dealing with basis or missed depreciation. They have automatic accounting method change procedures. So basically what you have to do is file a Form 3115, and it allows you to take the difference between the depreciation you did take, which may have been zero, and the depreciation you were supposed to take over that entire period of time. And if there was additional depreciation you should have taken, they allow you to pick that up in that year that you make this adjustment change. So if you placed a property in service in 2010, never took depreciation or you used the wrong basis, let's say too low of a basis, and then you sell the property in a later year, you want to make sure you got the deductions for that depreciation because the IRS is going to make you add it back whether you took the depreciation or not. So what you do is in that year of sale, you file a 3115 and you'd show the depreciation that you should have taken over these years, and the IRS lets you pick that up on that year's return. It's a complicated process of getting to there, but that is the ultimate answer. So don't think you're out of luck if your accountant or if you're doing your own return and you look at it and it says you need to recapture your depreciation because the IRS technically says you recapture the allowable depreciation, whether you took it or not. You can file this Form 3115 and get all of that back. And you don't need to go back and amend your returns to take that depreciation. In fact, you're not allowed to do that. You have to go the Section 3115 route. And then there's other options for maybe you took too much depreciation, and so you have to add back income, and there's another rule for that. But this is just to point out this accounting method change, and you're not out of luck. And don't get whipsawed by having to add back depreciation that you never took in the first place.